Good morning, Togglers. Welcome to today's edition of Toggle's Daily Video Insights. Today, we're going to take a look at why Paylocity could rise 5% over the coming weeks. In particular, as you can see here, actually, Toggle had some early signs that there could be a rally in the stock itself, which proved to be correct. Then recently got to be a little bit mixed, but then the most recent insight suggested there is quite a bit more upside still left in this rally. So let's take a look at this. This is driven by momentum, and we're going to explore a little bit more as to what exactly is behind this. The 7% price rise that the system is suggesting, it could be somewhere of the order of taking the stock to about 229.74. Now, some of this has already happened today. So obviously the remaining price move is a little bit less than it was when this was first generated. But the important thing is that it stays within this confidence interval. If it dips below it, certainly if it goes below 206.80, something else is happening. And so you should really reevaluate this position. Now, why might it move? What's going on? In particular, in this case, you see that actually the 6-month momentum tends to be very mean reverting. So it's been hovering around zero for some time. And historically, when that has happened along the lines of combining both the 12-month momentum positive and 6-month momentum stretched, the stock itself tended to have more upside than downside risk over the following month. So this is really a situation with relatively skewed risk. You can see this by clicking on past performance, and you'll see that more of the outcomes subsequently over the next month were positive. In fact, some reaching over 20% payout. But very importantly, when it didn't work, it really didn't work. It actually dipped below 10%. So this is certainly not a slam dunk. It's a situation where the odds are skewed to the upside, but you need to be very careful about the stop loss and obviously also see whether or not there are other reasons why you might want to own this stock. The goal of this insight, like any other, is to put this stock on your radar screen because it's effectively suggesting that the momentum could bottom, but it could be quite a volatile ride. So it may not be everybody's cup of tea. This is as much as we have to say on Paylocity. If you subscribe to our daily brief, it should already be in your mailboxes this morning. Otherwise, if you don't, please sign up at toggle.global. It's free to receive, and you can get a daily dose of market relevant content whose only aim is to spark some interesting trade ideas for you. Otherwise, if you like these videos, please like it or subscribe to our YouTube channel. Every day we publish an insight and go through it to help you break down the barrier between the wealth of fundamental and technical data out there and you, the individual investor who's trying to parse through it and interpret it. And we help you map it, tell you what matters, what doesn't matter, and how it might impact the holdings that you care about. In any event, thank you for your attention. Have a very nice weekend, and we'll talk to you again on Monday.